I don't think he's going to front run any potential changes that would be announced at the September FOMC meeting. I mean, the best we can hope for is that he gives some hint towards the resilience or at least the improvement in the US economy and that plans to start tapering bond purchases are in line. He can't unilaterally announce anything around what that may look like at Jackson Hole, but he could definitely reinforce the message after some of the doubts that have crept into the market lately that the Federal Reserve is definitely heading down that path, and we should expect that tapering announcement to come mainly in September, but potentially November of this year.
Sure. Uh, does it, I mean, I don't know, from the outside, it seems like the conversation has already started shifting to beyond tapering, to the pace of tapering. How will they go about reducing bond purchases month on month? I know that in 2013, it took about 10 years to go down to zero. What is your expectation, and what is it that you're telling clients?
I think they might go a little bit faster than they did in the last tapering plans. Obviously, they're doing $120 billion a month at the moment, split between mortgage-backed securities and treasuries. We're probably thinking they're going to bring those down evenly at a pace of around about $12 billion a month. So that'd be $8 billion in treasuries and $4 billion in mortgage-backed securities over the sort of course of next year, beginning in December and sort of ending up in the middle of next year. So a slightly faster pace, and there is scope, obviously, in that for the Fed to be a little more flexible when it comes to the composition of the tapering in terms of the mortgage-backed securities and treasury rundown. But by and large, once that process has finished, we think there'll be a significant period of time before they do start to think about hiking rates. And then there'll also be the conversation around about the balance sheet, whether they maintain its current value, which means they are still buying up bonds and mortgage-backed securities, or again, whether they start to bring that down in line with the increased interest rates.
What would the what would the time gap be between the end of tapering and the start of tightening?
We don't believe they'll start hiking interest rates until 2023. So you're going to have at least 6 months, potentially a year, before they start to move higher in interest rates. I mean, that's based on how the economy is going at the moment. The fact that we do think inflation is going to be a little bit stickier, but we'll come off those high levels. But obviously, a lot could change. And if there is a case of seeing a lot more inflation or an economy that improves markedly, then by all means, it could see an acceleration in that pace. However, it does seem that the US economy is moving into more of a mid-cycle stage, that the pace and of interest rate hikes would be very gradual, and that this is a very dovish central bank. So by all intents and purposes, we do think it'll be a very slow process to increase those interest rates when they do start, and a very sort of shallow trajectory for that path of rates to something back towards what would be considered normal.